Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Today, we have Lien with us. She's a chief strategist with GFT, and you've probably seen her on CNBC. You've seen her on many other shows. She does blogging on the internet, so there's a lot of different ways. Kathy is an expert in the FX market, so she'll be talking about volatility and high probability breakout strategies for currency trading. So I think we're going to have a great presentation today. So without further ado, I'm going to introduce Kathy once I can just make sure that I make Kathy the presenter. Welcome, Kathy.
Hi, can you hear me?
Yes, Kathy, perfectly clearly. You're the presenter. Welcome to the ISE webinar series. Are you back? I guess you've been with us a couple of times. Really looking forward to hearing your views of the U.S. dollar. I guess it's the first time you've been on with us that the dollar's been rallying. So really looking forward to what you think is going to happen over the next couple of weeks and months.
Right, and I'm excited to be here because it just gets more and more volatile by the day, and I think that it's really a testament to how the FX market is impacting so many different aspects of the global economy. So can I begin, Steve, or do you want to do the disclaimer first?
Yeah, I'll do the disclaimer, and can you just push the slides? I'll do the disclaimer, and then we'll go from there, because I already gave you the ball.
Gotcha.
So you could just hit the arrow, otherwise I could take it back. Oh, no, not that one.
Is it, where's the arrow? This one?
I got it.
Got it.
I think I switched it back. Okay. Obviously, options aren't for everyone, so please get a copy of the characteristics and risks of standardized options. Because I think options are a wonderful tool. They help you. They can help you diversify your portfolio. They can help you hedge. But again, that's up to each individual investor. And ISE FX Options allow you to implement your view of the U.S. dollar against 6 of the majors. So they're accessible through your options broker. They're exchange-listed securities, of course. They're cash-settled in U.S. dollars. They're European exercise, which means they can't be exercised early. Don't worry about that, though, because you can always close out of them anytime. You know, anytime that the markets are open, you can always decide to either sell or buy them back. And they can be traded as spreads. So you, if you have some sort of strategy that you want to implement, such as a vertical spread or a calendar spread, you can do that. And the symbols are right there. The U.S. dollar, Australian dollar, probably the most volatile recently, AUX, followed by the British pound, BPX, the Canadian dollar, CDD, Euro, EUI, Swiss franc, SFC, and the Japanese yen, YUK. These are all U.S. dollar relative, which means that the dollar is in the numerator. It's how many, when I go to another country, you know, what is the U.S. dollar really worth? So it's just that simple. And if you were bullish on the U.S. dollar, you'd be buying calls. And if you're bearish, you'd be buying puts. So I'm going to turn it back to Kathy now.
Okay.
Yours, Kathy. Thanks again.
Thank you, Steve. So what I'm going to talk about today is centering around carry trades and volatility, because that's really what is the best reflection of the market's current environment, and what probably a lot of people are interested in at this time. A lot of it also circles into what is happening in the U.S. dollar. We'll touch on that a bit, but we're going to go over what is the outlook for carry trades, what is the outlook for the U.S. dollar, what's going on in the market right now, and then talk about in what type of environment carry trades do best in, and sort of end with a high probability and volatility breakout strategy for currency trading, or for carry trades in particular. So for those of you that do not know what a carry trade is, let me flip over to the next slide. Carry trades are very simple in nature. This is a very, very old screenshot, and I'm sure that many of you will look at this and say, Australia does not have an interest rate of 4.75%. This is actually a screenshot I took out of my book from 3 years ago. But I like this screenshot because what it tells you is what has changed in terms of the directions of monetary policy. What we have is that carry trades were very, very popular from throughout 2003, 2004, 2005, and for good parts of 2006 as well, and so forth, because interest rates were increasing. And interest rates around the world were being hiked by the Reserve Bank of Australia, by the Reserve Bank of New Zealand, at some points by the Bank of England, and that really created an environment where going long carry was the easiest trade to do in the currency market and the most popular trade to do. Now, more specifically, this diagram here illustrates what it means to go long carry. What it means is you buy a currency with a high interest rate and you sell a currency with a low interest rate, and you basically fund that purchase of the high interest rate currency with the sale of the low interest rate one. So in this example here, you're going long Australian dollars and then you're shorting Swiss francs in the process. And this is what creates a carry trade, because in this example here, you earn the interest rate differential, which is 4.5% on top of whatever currency appreciation there is. Now, one of the best things to remember about carry trades is that carry is a measure of risk, meaning that people are willing to take on more risk and earn higher yields when things are going well in the global economy, when stock markets are rising, when everyone's happy and risk appetite is strong. However, that is obviously not the environment that we're in right now. And I think that that shows the change that we're seeing right now, because not only do we have an environment of higher volatility, an environment of rising risk aversion, but also an environment where we have central banks looking to cut interest rates around the world. So that's sort of the state of the current outlook for carry trades, and we'll go into much more detail about it when we take a look at some charts. The next chart here is just another example of the carry trade and why usually money or capital flows into countries with higher interest rates. And that is why whenever I do these seminars, I say that you want to put your money into a currency where the central bank not only currently has a high interest rate, but is looking to continue to raise interest rates. So, because of that, you can imagine what sort of environments we're in right now, which is that instead of raising interest rates, the Reserve Bank of Australia actually cut interest rates last week, and that has translated into a very significant slide in the Aussie dollar.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.